Hello and welcome to Seniors and Money. My name is Neil Israel and I will be your narrator for today's online workshop. I know you are all excited to learn, so let's go ahead and get started. Before we jump into the content of Seniors and Money, I'd like to talk to you a little bit about Transformance, the agency that's hosting today's online seminar, and also my employer. Transformance has positively impacted the lives of over 1.7 million individuals in its 40 plus years in existence. We are a provider of and financial and housing education, coaching, and counseling. We are accredited by the Council on Accreditation and serve as both a United Way service provider and also provide HUD multi-unit housing, counseling, and education. Some of our various units lines of service include credit and budget coaching, financial education, student loan counseling, AIM, an AIM program, C2SAVE program, housing counseling, debt management coaching, and bankruptcy counseling. So I'll explain this a little bit in detail. Credit and budget coaching are for those individuals that want to learn more about managing their money. Financial education really can be on any number of financial topics, be it the 4 C's of credit or foreclosure. Those can happen in individual settings or for group settings or large settings. Student loan counseling is for individuals that want to figure out how to, what the best mechanism is to, and how to really plan out how to pay back their student loan obligation. Sometimes that involves just sitting down and figuring out, along with their other debt, how to calculate in their student loan debt, or it can require a little bit more involvement from Transformance, which might mean that we actually help our clients fill out forms, or actually go so far as to contact the creditor with the client to try and get some understanding or concessions from that creditor. Our AIM program is a match savings program for people that live in the Dallas area or surrounding counties. And for those individuals that qualify, and you can contact us to learn more about qualification, basically that allows you to save $300 and we'll match you over a year $300. So at the end of that year, you'll have $600 plus compounded interest over that year. In addition, you'll get 12 months of touch points and learning on financial education during that time. Our C2SAVE program is in partnership with Dallas area community colleges, and the goal of that program is to help Dallas area community college students stay in school. Our housing counseling program can be taken actually from folks at many levels at many points of the housing spectrum, be it whether you're considering the purchase of a home, we provide pre-purchase counseling, or if as you own your home and you're thinking about the best way to what you might need to pay for, making sure that you have all of the costs considered. We will help you with that, all the way down the line to as folks might reach critical crisis period, and they need to consider those things such as foreclosure if they run into a circumstance where they can't actually pay for the house that they have. Debt management coaching. In this area, we provide credit counseling for those individuals that want to try to work out their debt. A lot of times we will work with both the client and the creditor to try to find a workable solution for debt, often acting as a reliable third party, and helping build a workable solution for everyone involved. For bankruptcy counseling, Transformance is licensed to do both the pre-filing bankruptcy and the pre-discharge bankruptcy in 44 states, and those are the two sort of certificates that are required for individuals that want to claim Chapter 7 or Chapter 13 bankruptcy. And as I said, we are licensed to do that in 44 states. As you can see, we have multiple lines of services at Transformance, and we would love to have you reach out to us if you have not already in one of to talk about one of these services. If you are already one of our clients and you're interested in one of these other services, please reach out to us at the number that we'll provide you in the last slide, or talk to your coach about the service that we can provide. So just a little bit about Transformance's ecosystem. Transformance's mission is to strengthen the community, and the way we do that is through something called economic empowerment. The way we view economic empowerment is through a three-legged stool, essentially. That involves financial education, what we're experts at, through workforce development, and through social services. And we partner with other organizations to provide social services and workforce development to the community while we provide financial education. And we believe that through this three-legged stool of economic empowerment, we believe that we can help individuals move into the middle class. And that's really how we want to help the community and can help build the community financially and build stability within the community. All right, so let's talk about seniors and money. So in this online setting, in this online session, we'll be discussing the following: senior considerations, reducing vulnerability, setting new goals, and tools. So senior considerations, we'll talk about some of the things that might be new things to think about for those individuals that reach a certain age. Reducing vulnerability, we know that individuals that are older might be a little bit less on guard, and just we offer some helpful hints in how to reduce the likelihood that they might be taken advantage of, that you might be taken advantage of if you are a senior. We offer a lot of tips in the first two bullets. So in bullet 3, we talk about setting new goals, how you might be able to accomplish those goals. And in the final bullet, we talk about some tools for helping you accomplish all of the items that we talk about in this session. So senior considerations. So some of the financial senior considerations that are new to individuals as they reach a certain age are they become increasingly serious with age, specifically financial. Really, one of the main things is if you think about inheritance, whether it's especially now you have at an increasing rate, you've got people that are in their 60s whose parents are still alive. So you might have thinking about your own inheritance and what you might, the money that you have that you will want to pass on, your own family planning, but then also your parents' estate and how you want to handle that. So there's as a senior in today's society, there's more family planning to consider than really ever before, in part because of new financial instruments, and in part because of a longer living period than we've had in years past. Another relatively new phenomenon is the degree to which long-term care may be a heavy expense. The anticipated health and living needs for later years can be a major cost. And of course, one thing that we know is that insurance, long-term care insurance, is something that changes nearly literally every single day, and is in the paper nearly every single day. So it's just something to think about, that while we might like to think that we can cover everything, cover all of the finances that we'll need during our working years, that might not necessarily be the case. So Long-term care and assisted living costs is just something to consider as we reach retirement age and a little bit beyond that. So what are some of the other important end-of-life decisions that are financial in nature? Executor of your will, who's going to decide what your final wishes are, beneficiaries, who's going to carry out the final your final wishes, estate planning, how exactly do you want that the outcomes to look from your will, and then the health related um, will type issues, advanced directives, healthcare proxy, and living will, with of course the healthcare proxy being the individual that you designate, individual or individuals that you designate to make decisions on your behalf when you're no longer able to, and advanced directives and living will being those specific guidelines that you give to the healthcare proxy, and also by default to the healthcare providers to say this is what I want, and this is what I may or may not want when I reach that those critical phases of when I'm not able to consciously make decisions on my own, and I need some assistance. Okay, so vulnerability. So this is when we talk about vulnerability in the case of seniors and money, what we're really talking about is seniors and financial abuse. And you might ask yourself, why are seniors open to abuse? Oftentimes, seniors may find themselves at a disadvantage because they're being abused because of their family members or caregivers are taking advantage of them, their acquaintances are taking advantage of them, and this can be from any number of reasons. Could be because of the trust that senior has in the intentions of others, maybe because of generosity and desire to do good. But according to many experts, including the Consumer Financial Protection Bureau, a lot of the underreporting of senior abuse comes from embarrassment or really just not wanting to talk about money issues with kids, and not wanting to talk about being taken advantage of with kids by the seniors. So the important thing there is really to encourage a culture of trust between the seniors and whomever is providing care to them, or the kids who can assist them in resolving any issues related to abuse. Other reasons for underreporting include not wanting to lose independence. Of course, there can be some erosion of decision-making capabilities that might play a role in why a senior individual may not decide to report on being taken advantage of, or may not actually realize that they are being taken advantage of. According to the Consumer Financial Protection Bureau's Money Smart for Older Adults, some of the factors that drive the underreporting of financial elder abuse, include shame, embarrassment, fear of retaliation, and dependence upon the individuals that are actually taking advantage of the seniors. And just as a general rule, we say on the next slide that seniors really need to consider when thinking about who might or may not be taking advantage of them. Just be wary of sales pitches. If things sound too good to be true, they generally are. And that doesn't mean don't take risks, because part of life involves taking risks. It just means getting things checked out if they don't sound if they sound too good to be true, getting advice from objective third parties that might be able to help you make a good decision and reduce your risk of being taken advantage of. In this next slide, we talk about the technology divide, and from a technology perspective, one of the ways that there's been a lot of growth in the fraud area has been really from social media perspective, as fraudsters are able to find out more information about who might be home at any given time, if they can isolate that individual, they can find out who they can contact and who they can prey upon, because those individuals may not be able to rely on another person for good advice. So a key thing here from a technical perspective is, if you are a senior or you are responsible for the care of a senior, just try to be very vigilant about not being online and not making it publicly known that you're available online when others aren't there at the same time. And that's not to baby anyone, but rather to kind of take care in terms of not putting out the red flag to people to say, hey, this person might be available, so just in case you want to try fraudulent activities, now's a good time. The CFPB mentions that some of the ways that you can minimize risk due to the technology divide between younger and senior adults is seniors can use trusted security software. Seniors can avoid using email information or account numbers when providing email information or account numbers out to the general public or out to businesses when doing businesses, not using any of that information to gain access to other information. Being cautious of when opening attachments or downloading files from emails, and using difficult to guess passwords. All of those are ways to minimize or mitigate risk associated with increased vulnerability from seniors. So it's really important as we think about, we've talked about a lot about the fact that as you enter your senior years, you're kind of taking on a new phase of life that requires additional planning, additional getting ready. And it's financial in nature. It involves your housing, your transportation, your overall health care and emotions. Really what we're talking about is the rest of your life, and that's why there's such, it's key, it's of a paramount importance that you're doing the planning required to get ready for that time, this time of your life, because it is, if you're no longer especially if you're no longer working, you want to make sure that you're covering all of these situations, because there's so much involved. So what we have here is the goal setting tool, a synopsis of the goal setting tool that was established by the Consumer Financial Protection Bureau. And that involves 4 key steps that are critical for goal setting. And really, if you think about it, goal setting is the cornerstone of any good financial preparation strategy, because getting to where you want always requires knowing what you want. And goal setting is really the practice of identifying and starting the path of getting what you want, identifying and getting what you want. So in step 1, it's really just brainstorming what is it that you want for you and the people that you care about. What are the long-term hopes and dreams as you enter into this I don't want to say last phase of your life, but as you enter into the senior part of your life. From that list, you want to take, the big brainstorming list. You want to make a list of what's called SMART goals, which is specific, measurable, actionable, realistic, and time-bound goals. So that means what you started with was really kind of hopes and dreams. This is now, what can you actually do? What can you accomplish? Once you narrow that list down in step 2, then in step 3, what you're going to do is create an action plan of how to accomplish those goals. What steps do you actually have to take in the immediate, in the intermediate, and then maybe even in the long term to accomplish those goals? And then in step 4, for those goals that require money, and for this for this activity for seniors and for senior planning, for estate planning, really everything requires money. Determine how much has to be set aside and go forward saving that money on a weekly basis, weekly, monthly, or daily basis, and put that aside towards your goal. Okay, so let's talk about some tools that can help you as you do your senior planning. One of the great tools is called a reverse mortgage. A reverse mortgage is a home equity conversion mortgage is a loan that allows homeowners that are 62 years of age or older to convert a home's equity into available cash. So this is really something that, of course, is only available to seniors, but allows you to benefit from something that you've been paying into for quite a long time. So what is a reverse mortgage? Reverse mortgages are considered rising debt following equity loans because as debt increases, the home equity falls. So in other words, as more money is taken from the house, the home equity falls because that equity is being converted into cash. What are the types of reverse mortgages? The first is the single-purpose reverse mortgage, where state and local government agencies or nonprofit organizations offer these. The federally insured reverse mortgages, that's where we talk about the HECM or the home equity conversion mortgages, which are backed by the Housing and Urban Development government group. And then property reverse mortgages or private loans that are backed by companies that develop them. And those are fairly infrequent. But again, reverse mortgage is something that can help people as they've set aside money, as they've saved money their entire life, they put money towards their house their entire life. There are multiple types of payouts that you can get from a reverse mortgage. You can get a lump sum, you can get a line of credit, or you can get an annuity which pays you at a regular fixed dollar amount throughout the life of the loan. You can also get, how much you get depends on quite a bit. It depends on the interest rates, of course it depends on the loan fees, and then the appraised value of the home or the FHA mortgage limits for the area. So really from a senior perspective, the key tool is the reverse mortgage in terms of being able to generate cash for senior planning. There are other tools such as annuities and things like that, but for the majority of the older population, that's one of the major tools. Here we'll stop for just a second and let you take a look at these references for AARP, HUD, the U.S. Administration on Aging, Elder Care, and the National Council on Aging, and write those down that you can reach out to for information for seniors and aging. And then I did want to also mention to you Transformance's app called Pocket Change USA, which is available both on Google Play and the Apple App Store. It's also available online, which you can find on Google. Pocket Change USA is a great tool for helping individuals learn, plan, play, and connect. And from a seniors and money perspective, I think the most valuable thing is the plan module, because as individuals take on new activities, planning is critical, and planning for seniors can really benefit by building a plan associated with the tasks that they have to take on as they enter into this new phase of their life. And through Pocket Change, you can get reminders, you can set reminders for yourself, and you can get encouragement that can help you successfully reach your goals. All right, well, this concludes our presentation today of Seniors and Money. I do want to thank you very much. Please feel free to join us at www.transformanceusa.org. Again, my name is Neil Israel, and I thank you very much for joining us.